Hello and welcome to this Thursday edition of FreightWaves Now. I'm your host Anthony Smith, and today I'll be teaming up with Zach Strickland. He's going to give us a carrier update brought to you by PowerFleet, and I'll follow up soon, shortly after, with the shipper econ update. Stay tuned.
Welcome to your Thursday carrier update presented by PowerFleet. I'm Zach Strickland, and we're watching our tender rejection rate flatten out as we enter late week. So midweek, this is of course yesterday's rejection rate today, 15.13% on the outbound tender rejection index for the United States in total. I have the other modes of transportation that account for roughly about 90% of the entire data in the tender rejection rate pulled up here. So we've got reefer leading the way with 20.9%. And you can see the reefer rejection rate actually has been trending higher over the last couple of days, a little bit counter to the rest of the market. But you see the van rejection rate here sitting at 16.35% in green. That is moving horizontally, literally just a slight downturn yesterday, about 3 basis points, 0.03% turning down on the van rejection rate. So it is flattening a little bit after, it started to look like things were going to stabilize a lot more than they had earlier in the week after we topped over the 4th of July. Flatbed tender rejection rates continue to fall, however. Again, flatbed, not a lot of contracted flatbed freight out in the world right now, but it looks like it definitely is starting to loosen up dramatically for the flatbed carriers out there, especially on the contracted world. But we are, it is somewhat, puzzling. I don't know if puzzling is the right word or not, but it is somewhat intriguing, to say the least, that we are still hovering in this 15% rejection rate world and not trending down. So things may not loosen, as evenly as we normally would expect after the 4th of July holiday going into July. So again, these are interesting times we're living in, continued, throughout the United States. So looking at our regions of reefer rejection rates, and you can see the 32.31% Southwest reefer rejection rate. Things are starting to pick up out there again after calming down quite a bit in the last week. West Coast freight reefer rejections still starting to trend up a little bit higher, 29% there as well. You've got your Northeast reefer rejection rate picking up the tail end of the pack there with 11.28%, continuing to be one of the more stable areas to have reefer activity if you're a shipper out there. But the carriers for sure are going to start to see a little bit more spot market activity pick up in the Northeast, something we had not really seen a lot of. Again, still one of the more stable environments in the country right now. The rest of them moving a little horizontally, Northwest, Midwest, etc., all moving a little horizontally right now, hovering around that 16% tender rejection rate for reefer. Let's look at the van side of things. Van rejection rates do not have the same trajectory as the reefer side. Reefer looks like it's horizontal to up. Van looks like it's horizontal to down for most of our regions in the country right now. We've got the Southeast sitting up there leading the way, 20% rejection rate. We got the Midwest, the largest region of the country geographically, also with the amount of volume, 14.45%, a slight trend down, but again, not a tremendous drop or dip, which is what we normally see in the rejection rate post July 4th weekend or holiday, whatever you want to call it. We do see some of that actually happening up there in the West Coast, on the van side. So again, reefer rejections going up out west, but van rejections coming back down, and coming back down swiftly. If you remember, the Los Angeles and Ontario markets have been some of the more tight markets, and a lot of the freight volumes have been coming off the West Coast. That is starting to decline right now. So the van carriers out there may not see as much spot market activity as they did prior to July 4th, which again, that's a normal pattern. Looking at our the money map, as Luke Falaska calls it, we're looking at our outbound rejection volatility from top to bottom. Huntington, West Virginia, Lubbock, Texas, South Dakota, some of the more statistically significant increases in rejection rates. But again, those are some smaller markets. I'm looking at Dallas and Fort Worth continuing to be one of the more tight areas. Again, still seeing those rejection rates increase. And Indianapolis, again, a pretty large market, seeing a pretty strong increase in rejection rates. So a couple of hot spots in the country, but still the majority are starting to level out. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your Shipper Econ Update. I'm your host for this segment, Anthony Smith, and also the lead economist of here at FreightWaves. And today, we're going to shift gears a little bit and we're going to talk about the Logistics Managers Index. Last Thursday's episode, we introduced the PMI, the Purchasing Managers Index, and similarly, we have a Logistics Managers Index. This is a collaborative index that's put together by Arizona State University, Colorado State University, University of Reno, Nevada, Rochester Institute of Technology, Rutgers University, and I hope I'm not forgetting any others, but Zach Rogers and Dale Rogers, they help head up this index. And behind me, I have it displayed right here in this chart. This chart, we see that LMI, the Logistics Managers Index, is going to be displayed in the purple line here. And in the purple line, we can see that it spiked up in the most recent month, and that really ties closely to the the orange line here, which is our outbound tender rejection index. And so when we're looking at the LMI, the purple line here, it's very similar to that PMI number that we looked at last week. And so this is a diffusion index that's built around the number 50. So similar to the PMI, the LMI, anytime it's over that 50 threshold, it's indicative of expansion within the transportation industry. Anytime it's below that 50 threshold, it's indicative of contraction in the transportation industry. And within the LMI, there are 8 separate components. It takes account into things like warehousing, transportation prices, and inventory levels throughout the entire transportation industry. And the other key designation for the LMI here is that it doesn't just look at manufacturing and the entire industry of manufacturing like the PMI does, but it looks at the consumer side as well. So it really has an upstream and downstream effect. Downstream looking a little bit closer at some of those retailers closer to the consumer. In this next chart here, we have the LMI, and we have it displayed in the purple line, but this is specifically looking at the transportation prices segment. And so what we saw in the overall LMI and within one of the segments here is that this really kind of provided that upward momentum in the overall index for this month. What we're seeing in the Logistics Managers Index and throughout the logistics industry is that transportation prices have indeed increased over the course of the last month or so. And so this is not just talking about capacity, but capacity has tightened over the same time frame. One of the things that did skyrocket throughout this month as well, in addition to transportation prices, were inventory levels. And this is really tied closely to the amount of inventory that was pulled forward and expectations of a lot of states reopening. And so producers are looking to get their products put in place in order to kind of take advantage of more and more states starting to reopen. And so as we can see right now in that LMI for the inventory levels here in this purple line here displayed on this chart, we have a reading of 64.29. And so we're seeing that inventory levels are indeed skyrocketing. So with inventory levels skyrocketing, we also have warehousing capacity similarly going very, very low. So it's very far below that 50 threshold, sitting at 41.67 right now, showing that warehouse capacity is very tight and inventory levels are indeed extremely high right now. So right now we're looking at downstream on throughout the transportation industry, looking further at the consumer level. They are very tight right now, and this is something that's going to really impact the supply chain and cause some potential disruptions as we look to potential recovery and what some of the implications are going to be as we move throughout the remainder of the second half of 2020. Thanks so much for tuning in. That's going to do it for the Shipper Update in this episode of FreightWaves Now. The content doesn't stop here. We're always streaming, so check out our FreightWaves TV app on all your favorite streaming platforms like Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.